Imagine this. The US Mint, the official mint of the world's reserve currency, just disappeared. No announcement, no press release. 1 minute, silver was up for grabs. The next, it's gone, vanished, like it never existed. And here's the kicker. This isn't a glitch. It's not because silver's too expensive. It's because the mint can't get the metal. Now, why does this matter to you? Because this is the beginning of something bigger. The silver market is about to experience a ripple effect you won't see coming, and London? They're next. Want to know what's really happening and why it could change everything? Stick around, because this is just the start. Here's what you need to understand. The US Mint didn't just pause silver sales, they stopped completely. And while the mainstream media calls it a temporary technical suspension, don't be fooled. This isn't a minor issue, it's a major shift. The Mint isn't halting sales because silver went up too fast. No, they stopped because they can't source the silver. It's gone. And it's not just the Mint. Behind the scenes, private mints are already feeling the pressure. The market is in chaos and the contagion is already spreading. But why? What does it really mean when a sovereign mint, the US Mint, stops selling its own product? This is a red flag, and it's setting off alarm bells across the global silver market. But here's the question no one's asking. What happens when the world's biggest silver supplier runs dry? The reality is clear. The US Mint didn't just make a precautionary decision. They're caught in a bind. The silver isn't there. Let me break this down for you. We're talking about a 300 million ounce global deficit for 2026. That's not a small problem. It's a massive gap between supply and demand. And right now, the Mint is stuck, unable to meet demand at the paper price. They're looking for silver, but the suppliers are saying, sure, we can get you 500,000 ounces, but it's going to cost you $120 per ounce. Now, pause for a second. The Mint can't eat that margin. They can't sell you a silver eagle for $45 when it's costing them $120 to source it. That's why they had no choice but to pull the plug. The Mint has just confirmed what the rest of the market is too scared to say out loud. The system is broken. But here's the part nobody is saying out loud. If the US Mint is struggling to get silver, what happens when the other mints run out too? This is where it gets serious. When a sovereign mint like the US Mint pulls the plug, it's not just a glitch in the system, it's the beginning of a breakdown. Think back to the 2008 financial crisis. Banks were exposed, and one by one, they started to collapse. That's what we're seeing here with silver. The paper market has been in control for years, suppressing prices, using futures contracts, and relying on fractional reserve banking. But now it's facing an undeniable truth. There isn't enough metal to meet the promises, and this is just the beginning. The supply squeeze isn't going to be over tomorrow. In fact, it's only accelerating. London's vaults are already under pressure, and soon that same pressure will be felt globally. The prices we're seeing on screen, they're fiction. The reality on the ground is far worse. So now that the Mint's actions have torn the lid off this issue, here's the bigger question. How long until the entire system crumbles under the weight of its own paper promises? Here's where it gets even more alarming. While the Mint's suspension is grabbing headlines, something even worse is happening behind the scenes. Silver's spot price says 90.38, but here's what's really going on. Premiums on physical silver, they've skyrocketed up to 1.5 times the spot price. That means if you're trying to buy, you're paying $135 per ounce for a piece of silver that's worth $90. Now, do the math. This isn't a price spike. It's a price disconnect. The market is screaming that something fundamental is broken. And here's why this changes everything. The difference between the paper price and the physical price is the smoking gun. This gap isn't just a minor discrepancy. It's the market telling us that the paper system is about to collapse. But here's why that matters. When the paper price starts to diverge from the physical market, it's a sign that the entire infrastructure is on the verge of unraveling. The question is, who's going to get caught when the music stops? Now things are moving fast. And when I say fast, I mean it. Here's what you need to know. In just a single day, over 1 million ounces of silver were moved out of the COMEX vaults. That's not just a spike, that's a run on the vaults. At this rate, we're looking at a full-on crisis unfolding right in front of us. And as if that wasn't enough, we've got the US Mint pulling back, premiums going through the roof, and silver's spot price struggling to stay above $90. But it doesn't stop there. The real panic is just beginning. These aren't isolated events. They're signs that the system is teetering. And here's the real kicker. If this continues and the supply squeeze deepens, it's only a matter of time before the entire precious metals market locks up. So let's ask the real question. What happens if this continues? What happens when the metal is gone and the system can't deliver? Now, let's bring this down to earth, because this isn't just a story about markets and prices. It's about real people, real impact. People like you who are now facing the consequences of a broken system. Imagine this. You've saved up, you've built your wealth, and now you're trying to get your hands on silver, whether it's for protection or as an investment. But when you walk into the store, the price is way higher than you expected. Or worse, they don't have any at all. This isn't just about numbers on a screen anymore. It's about how ordinary people like you are being locked out of the market. You're stuck watching prices soar, and there's nothing you can do about it. Now, let me ask you, does this situation feel familiar? Have you seen it happen before in other markets? If this resonates with you, leave a comment, because the more you understand what's happening, the more you'll realize how critical it is to act before it's too late. But here's where it gets deeper. This isn't just a silver shortage or a price spike. It's a systemic issue. Let's take a step back and look at the forces at play here. The truth is, this isn't just market volatility. It's a breakdown in the very systems that have kept the price of silver suppressed for decades. Fractional reserve banking, paper contracts, and the futures market have all been used to maintain an illusion of abundance, while the reality is there just isn't enough metal to meet demand. Why is this happening? The system is built on the assumption that physical silver will always be there to back up the paper claims, but that assumption is crumbling fast. And here's the unsettling part. As the market shifts, the institutions that have been controlling the flow of silver are facing a crisis they're not equipped to handle. The very mechanisms that have kept silver prices low for so long are now coming undone, and it's happening faster than anyone expected. This is where things get dangerous. The system is buckling under the pressure of its own contradictions, and that's what makes this situation so unprecedented. So what happens next? Well, we're at a crossroads, and the path forward isn't clear. There are two possible outcomes, both equally explosive, but in different ways. First, we could see the market stabilize. The mint could resume sales, the premiums could shrink, and the price could settle into a higher but manageable range. It might be a grind, prices hovering between $90 and $110 for months as the market slowly adjusts to this new reality. But here's the other, much scarier possibility. The paper market completely unravels. The futures contracts collapse. The LBMA in London could announce they can't honor physical delivery. That's when things get really ugly. Silver could shoot up to $200 or more quickly. The shorts are trapped and they're forced to cover at any price, which drives the market into a panic, a real short squeeze. But no one really knows which path we're heading down. The data is suggesting something big is coming, but the timing and direction are uncertain. The only thing that's certain, this market isn't done moving. Now, here's the most important takeaway. This isn't just another market anomaly. This is the beginning of something massive. The physical silver market is breaking down, and the consequences will echo across the entire financial system. Whether we see a short squeeze or a grinding market, the fundamental truth remains the same. Supply is drying up, and the paper market is lying about the reality on the ground. So what's your move? If you've been watching this unfold, now's the time to act. Don't wait for the media to catch up to the reality on the ground. By the time they're reporting it, the opportunity may already be gone. For me, the indicators are clear. I'm watching the premiums, the COMEX deliveries, and the vault data closely. When those numbers shift, I'll be ready to move. But I've already made my plan, and so should you. If you want to stay ahead of this story as it develops, make sure you follow for more updates. You'll want to be the first to know when things go from bad to catastrophic. Thanks for watching, and I'll see you in the next video.